Hey, my name is Rajesh. I am a direct lender based in Los Angeles, and I specialize in multifamilies. Today we're going to be looking at my new maximum home price calculator. And with this calculator, you can figure out what the maximum purchase price is for your specific situation. So let's say you are buying an owner-occupied 4-unit. You're going to be living in 1 unit and you're going to be collecting rent from the other 3. You can figure out what the maximum home price is that you can qualify for based on your information here. So let's take a look at a hypothetical situation. So first we're going to start with, let's just say you want to buy a rental. You do not want to live in it. So your minimum down payment is going to be roughly 20%, because as you can see here, maximum LTV is 80%. And that's for 1 to 4 units. If you're doing 5 units plus, your maximum LTV is 75%, which means your minimum down payment is 25% down. The other things we want to look at here are what your adjusted gross income is. On a DSCR loan, you could actually have 0 adjusted gross income as long as the rent's covered the bill. So let's say in Los Angeles, you're looking at a place where, average rents are $19.75 per unit, and you're looking at 4 units. So that's roughly $8,000 a month minus $25 minus 100, so $7,900. 1975 times 4, 7,900. Other monthly debts, you don't really have anything. You only got property taxes. California, it's 1.25% of the purchase price, so let's say $10,000. Hazard insurance, probably closer to $1,700 a month now, or a year now. And on a DSCR loan for a 1 to 4 unit, you're probably looking at a 7.25% interest rate. Liquidity, let's say your liquidity is what's going to count towards the down payment and your reserves. So let's say you've got about $150,000 saved up, and the loan term is 30 years. So what we can see here, and the qualifying income is $7,900 a month. Your total monthly debts are $975 based on property taxes and annual hazard insurance. So we can do the math here: 1,700 plus 10,000 divided by 12. You're looking at $975 a month. Your mortgage payment, the maximum mortgage payment, this is what the maximum mortgage payment you could afford is. That means your principal and interest payments, because you have to add your total monthly debts here, which in this case are property taxes and insurance. That means with this payment at an interest rate of 7.25%, your maximum loan amount is actually $1,015,000. So this is your base loan amount. You've got no mortgage insurance, no upfront mortgage insurance premium. Your max LTV is 80%. That means your max purchase price is $1,268,000, $1,269,000, and if you were to do that, you would need a minimum down payment of $253. But because your liquidity is $150,000, if we were to use 100% of that towards down payment, that means the max purchase price for you is $750,000. And as you can see here, this chooses the lower of these two options and gives you a maximum home price of $750,000. It tells you the loan type, DSCR loan, max LTV 80%, and this tells you your maximum monthly principal and interest payments. So now we can go to Zillow and let's see here, South Bay, California. let's see if this pulls up as a result. So we're roughly here. Now we would just go to multifamily or deselect all, select multifamily. We'd want to stick to something with 4 bathrooms because they have a higher chance of being a fourplex, and we would enter a max price of $750,000. So let's see what pops up here as a 4 unit. So this one pops up at 6 beds, 6 baths, but it might still be a duplex or a triplex. This just says multifamily. It doesn't indicate what type it is. This is 6 units, so this would definitely qualify for a DSCR loan, but you would need to put 25% down. The good thing is, if you have $150,000 liquid per that example, that is exactly what you can buy times 0.25, 150,000. So this one would qualify. But this is only 50% ownership in the property. So again, that's not a good idea. Why share equity when you're putting down all that money? 2 income properties. So this is a duplex. It says it right over there. Let's see what this is. This is also multifamily. It doesn't say duplex. This is a short sale duplex. Let's see what this is. This just says multifamily. There's a 5 unit multifamily. Rents are significantly below market and average $434 per unit. Ouch. So I think one of the conditions when purchasing this building is requiring that that it be delivered empty. Individually metered, that's good. Space for on-site laundry, that's good. Building components, roof, electrical, and plumbing are 20 years old. That's fine for electrical and plumbing, but the roof, it needs work after 20 years. Most, if not all, of the interiors are original to semi-original. You gotta redo those. There's a historical zone. Any new development would need to be approved by the historic preservation staff. Ouch. So you've got to keep the historic look to it. So you'd want to paint it, keep the roofs, keep all those shingles, and anything that keeps them with the current styling. I'm betting that they would probably want this fixed. That's a shared heater or water heater right there. Separately metered. Got the separate mailboxes. Yeah, so I mean, you could buy this one with $150,000 down. Well, no, let me see here. This is 5 units, so $150,000. Yeah, you could buy it. No, you cannot, because this was for the 4 unit. So this requires 25% down just because it's 5 unit. So you're looking at a minimum 725 times 0.25. You gotta put 181 for this one. So why even waste time? Let's go look for something that would fall within this. This just says multifamily. It doesn't say what type. Probate sale with court confirmation required. The property includes a main structure and 2 units above the garage. So this is a 3 unit. This is a 3 unit. Sold subject to non-paying tenants in place. So that means there are non-paying tenants, and the property is being sold with tenants in place. It will not be delivered vacant. So good luck with that. This is a triplex. Really depends on what the rents are. $51.34. So let's see here. 90026. Zillow average rent. $2,700 a month. That's pretty good. But let's see what that applies to. A one bedroom is $23.53. Jesus, that's a lot of money. I want to see what's the bedroom structure here. Does it say? Six bedrooms, 6 bathrooms, triplex, so 2 bed, 2 baths per unit. Let's just assume that. So it's 2 beds, 2 baths. So 2 beds, 2 baths is $31.50 a month. So $31.50 times 2 is what? $6,300. 50 times 2, $6,300. And since it's a DSCR loan, you're actually doing 3 units, so $31.50 times 3, $94.50. $94.50. Hazard insurance would stay the same. Property taxes, this is what? Oops, what happened there? Got stuck to my little mouse. That did not sound right. Times 1.25%, 8612. So you're looking at 8612. Let's just say 2,000 just to be safe. This is a DSCR loan, 3 units, 7.25 is a pretty good guess. Let's say you have 150 in liquidity. Your max purchase price does not change. It's still at $750. But assuming you had more cash available to make the down payment, to make the minimum down payment, you're looking at a max purchase price of $1.5 million. So technically you're getting this at a huge discount. Let me pull up my DSCR calculator here. So LA mortgage dude, DSCR calculator. Also pull up my cash flow calculator. So this is 1721 Morton. Oops, wrong place. And this is priced at $689. Where is this? $689. Property taxes, realtor commission, property management, let's say 0 because you're going to be self-managing it. Down payment, we're looking at maybe 20% down. Closing costs, 7.25 for the amortized. Yearly inflation for LA, that sounds about right. Projected ARV, we're not going to do any improvements here. This was what, $689. So let's take a look at the cash flow here. We've got 3, $31.50 each. Got a vacancy ratio of, it says 0 here, that's not right, let's leave it at 8. So here we go. 16, we said 2,000, right? HOA trash removal, that's already including the taxes. Maintenance is 869. You're looking at a net operating income of roughly $83,000 after property taxes and insurance and maintenance costs have been deducted. Debt service is $45,000. Your net operating income is, let me raise this up higher here. So your net operating income is $83,000. Your debt service is about $45,000. Your cash flow is $38,000 a year from year one. Your cash flow in year one. Net cash flow, net income is $12,000, so you've got a lot of depreciation and mortgage interest you can write off. Your exit is not so hot. In your first 2 years, fifth year you make $27,000 in profit. 10th year, $283,000. 20th year is where it starts getting interesting, $1.5 million. 38th year is $4.7 million. And if you look at the lifetime returns on everything, you're looking at a $6.5 million exit, almost a 10x return on the price, but actually cash on cash return of almost 3,600%. This place is ridiculous. This is a gem. Assuming these numbers check out, of course. Let me see what it looks like in terms of the DSCR underwriting calculator. So we said 689, 3 units, 0 vacant, 9450, gross rent 0. So property taxes, that's roughly correct. Let's say that's true. 0, 0, 0. We're zeroing out everything on. It says 945. I'm actually going to put maintenance costs at 869. 869. Pest control 0, legal 0, advertising 0. So we're looking at net operating income of 7730 at an interest rate of 8.25. That's not true. 7.25%. So your gross DSCR ratio is 2.0. Your down payment is roughly $137,000 at 20% down. Your monthly payment's $37.60. Your net cash flow is almost $4,000 a month. According to that, in reality, you're looking at a net cash flow of $38,160. So let's see, 38,160. 38,160 divided by 12, 3180. This is a really good investment for $134,000. And I'll tell you why. You're thinking $134,000, right? Down payment divided by 38,160 per year. How many years is going to take to recover that? You're looking at a 3.5-year return, and that's fantastic. So in 3 years, you've recovered your original down payment, I believe, if I did this right. 38,160 divided by 12 is 3180. So let's look at it as 3180, okay? We're going to go 134,000. Let's see what the original down payment was, just to be sure here. 137,800. 137,800 divided by 3180 a month. 43 months divided by 12. That's 3.6 years. So you're recovering your original investment in a little more than 3.5 years. After 3.5 years, 4 years, 5 years, you can also, if you're not satisfied with just getting that and you want to cash out, you can do a cash out refinance, pull out up to 75% of the value of the building, and now you've got a building for free plus whatever you've already pulled out via the rents in those first 3.5 years, because it's going to appreciate pretty strongly. So let's see, first year it's 143, second year 148, fifth year 168 right there. Yeah, so fifth year is when your equity appreciates enough to make doing the cash out worth it. 10th year is when it would be there. So this property, it doesn't even make sense to do a refi to pull your original equity out. Just leave it, and in 3.5 years, based on the rents alone, you've made that money back and then some. This is a really good building, actually. Based on the numbers. Again, I do not know what it's like to actually live in this building, what the condition of it is, what it's actually earning in rents, just based on online numbers. So this is where I would pick up the phone and talk to the agent. So let's say we want to do that, right? Let's say we want to try it as an owner occupied to lower our down payments significantly. So, and let's say we earn about, I don't know, $6,000 a month. Gross rents, we're going to be occupying one of them, and leaving and collecting rents from the other two. So $6,300. We have no other debts. Annual property taxes stay the same. Hazard insurance stays the same. Interest rate on an FHA loan, owner occupied, stays the same, and our liquidity stays the same, $150,000. So now we're looking at owner occupied properties on FHA loans. Max LTV, if you can see down here, is 96.5%. That means on an FHA loan, if you're going to be owner occupying it, your max down payment or your minimum down payment is 3.5%. And your max price based on your qualifying income, which is this plus this. Oh, this is yearly adjusted gross income. So there's, I put 6,000. Let's say here 72,000, right? Now all of a sudden our max purchase price is $709. So our max mortgage payment is $4,146 because our total qualifying income is $10,725. These are our debts, our property taxes and hazard insurance. So we subtract that from here and then divide this by, or multiply this by 46.9 or divide by 2. That gives us roughly this much, 4146. Based on those payments, we're looking at a max loan amount of $684. Because this is FHA loan, you're going to have to do upfront mortgage insurance. So that means your loan amount is actually that much. And you got $314 going towards mortgage insurance. Your max purchase price, therefore, is $709, and your minimum down payment is $25,000, not including any of the other closing costs, of course. And that means even as an owner-occupied property, this property is a winner, $689,000. You're getting it cheaper than your max purchase price, and so your max mortgage payment here says, this is P&I payments, by the way, is $4146, right? $4146 plus your total monthly debts is $884. That's $5030, and your gross rents are $6,300. $6,300 minus $5030. So you're getting $1,270 a month to live here. You're getting paid to live here. This would cover the utilities, assuming they're common utilities. And if they're split utilities, you're just getting paid to live here on top of your yearly income. So let's say times 12, 15,000 roughly plus 72,000 a year. And now your income is 87,000. You're earning 87,000 a year. And you, of course, get to write all this off. And this is with an FHA loan. If we go conventional, let's see what the numbers look like. Now your max purchase price, because even though there is no upfront mortgage insurance, there is still a private mortgage insurance. And private mortgage insurance on a conventional loan is 1.75% of the loan amount divided by 12 months. And so you get $785 a month. Because this number is bigger than on the FHA loan, you end up having to, your monthly payments are considered higher. As a result, your purchase price is limited. Now, on a conventional loan for a first-time home buyer, your max LTV is 97%. So if you have owned a home in the last 3 years, you're not considered a first-time home buyer. However, if you owned a home more than 3 years ago and you stopped living in it more than 3 years ago, then you are considered a first-time home buyer and you would qualify for the 43% down program. So, I mean, to me, this property is just a winner. You get it on the FHA loan and live happily ever after. So this is something I am definitely interested in pursuing for myself. This property works on so many levels. It's an absolute gem. Assuming, again, everything is on board. It says triplex, so 6 beds, 6 baths. I'm going to assume that it means 2 beds, 2 baths every unit. It might not be, and in which case the average rentals change. So you might choose to live in a smaller apartment and rent out the bigger place to make it work. This has been on the market for 416 days, so there's clearly something wrong here. Maybe it was overpriced, maybe the tenants aren't paying. I do not know. Maybe it's the area. Let's see what the area is. With rents like that, I doubt how bad the area can be. Elysian Park, Echo Park, Silver Lake. So, okay, yeah, that's the 101. That's the 101. Angels Point. It's right by Angels Point. That's not a bad area in terms of real estate. I mean, quality of life, I don't know. I don't know downtown LA too much. To be honest, it's been years since I've been there. Yeah. It's got Chinatown, got Skid Row far enough away. Let's see what this area is actually like. 90026. I want to see life quality in so this looks like once this loads up. So if it's sort of the darker the color, the better the area. Let's see where this is on the map here. Right, so you've got Elysian Park, Angels Point, right there, Stadium Way. So this is like right over here. Got that sort of weird. Right here, I believe. Somewhere right here. Right? Got this freeway or road that goes like that and beams up. Let's see the name of the street here. This is Morton Ave, Morton Place, Sergeant Place and Park Drive. Sergeant Place, Park Drive, Morton Avenue, right here. So this is a really good area in terms of property values. Let's say quality of life, though. Best neighborhoods, household income. It's sort of like right on the border, so like not quite average, a little bit on the higher side. Rent prices, internet, more. Per capita, I was hoping to see something like crime rate. I guess they don't want to focus on that. Employment rate, that might be an interesting one. Let's pull this up. This looks like unemployment rate. I wish they'd move this over here, just keep it consistent. I hate when they have like different sides for the zoom buttons. There we go. So it's got high unemployment rate, high to moderate unemployment rate. That might be why the property is going for so cheap. That's a weird thing, because it's like saying it's the best neighborhoods but has a higher unemployment rate. Let's see what politics looks like around here. Not that I care. More conservative, pretty liberal. As you can see, it's a pretty liberal area. Internet providers, that's something that's good to know. So it seems like you've got a lot of choice, basically, which is really good. I don't really care for politics of the neighbors. Let's see what it's like based on income, right? Yeah, I mean, they've got pretty decent incomes here. It's just striking to me that it's also considered something that's like, right, that the unemployment is higher. Too bad they don't have anything about crime on this. Maybe I would go to a different website to figure that out. There we go. Overall crime. Here's Stadium Way, DC Park. Alright, so here we are. This is very bad in crime. Let's see what type of crimes are we dealing with here. Property crime. I mean, this whole area is pretty red. Holy crap. Let's see what violent crime looks like here. Alright, so I changed my mind about wanting to live here. Maybe more here would be safer. So let's zoom in and see what this is like. This is Mount Washington. Yeah, here we are. Yeah, so we're looking at like an F even in terms of violent crime. Wouldn't be great. This area seemed pretty attractive, but like you just cross the freeway and bam, safer. For a little bit, like this little section here is safer. And then you get to the other side of Mount Washington, and we got sort of like these safe zones right here. Okay. Well, I mean, that's pretty much my analysis. Whether you actually choose to live there or not is absolutely your decision. But what we can see here is that financially, choosing to buy that place, it pays you to live there. you get to be paid to live there. That's the benefit of this property, and this calculator figures it out for you. If you'd like to try out this calculator for free, as you can see, it's on the web page. You don't have to enter any information to access it. It's just there for free. It's lamortgagedude.com. That's me, the LA Mortgage Dude, and / multi-generational loans. And yeah, go ahead, check that out, and we'll talk next time. Thank you.